Welcome to this Killick Explains video, and this week I thought I'd take on a refresher on the 5 key rules when it comes to managing your own tax affairs. Now, you don't have to manage your own tax affairs, but if you're going to, bearing in mind we've got the end of another tax year approaching, here are some rules of thumb. So, what we're going to look at first of all is how to minimize tax drag. All right, and basically there are 2 ways you can look at tax. As I mentioned, DIY, which is completing your own tax returns, being aware that you need to do that, or handing it over to someone else. So what are the DIY golden rules, if you like? And I reckon there are 5. 1, knowledge is power. 2, get your diary organized. 3, sort out your paperwork. 4, make sure the tail isn't wagging the dog. And 5, try and be consistent. So let's revisit those one in turn. Knowledge is power. What do I mean by that? What I mean by that is that with or without the help of one of these how-to guides, so I've done one on how to save, plan and invest tax efficiently. That's available at editor@killick.com. But with or without that, the key personal taxes are worth getting your head around if you're going to do it yourself. So the basics of income tax. What's it charged on? At what rate? What are the exemptions and exclusions? Capital gains tax. That's the tax that you pay when you sell stuff at a profit. But you don't pay it on everything. And it's worth being aware that the rate regime is slightly different. The allowances are different and so on. Then there's inheritance tax, the tax we eventually pay on any death estate that's left behind. And then, of course, slightly less important than what I call the big 2 or 3 there, you've got stamp duty. And you've got VAT. Now, nobody completing their own tax return would expect to be an expert on those topics. They're vast. People spend years and decades getting good at them because the tax rules are complicated, but finding out the basics. And then really what you're trying to do is work out, am I up for this? Can I do my own tax return, for example, or should I get help? That's what it's all about. You're not aiming to do a university degree in these topics, but an understanding of at least the basic mechanics might give you a feel for, crikey, my own affairs are a bit complicated, or actually, no, they're pretty straightforward. I reckon I'm on top of it. Diaries next. Point 2, get deadlines into the diary. You need to be a little bit organized if you're going to do your own tax affairs. There are certain key deadlines, obvious ones. 31st of January is one for self-assessment purposes. 5th of April is another for tax efficient saving, ISAs, JISAs, SIPs, and so on. There are some others if you're self-employed, run your own business. So know basically what you've got to pay and by when, because nobody wants to be attracting penalties. Nobody wants to be fined by HMRC. Nobody really wants to be on the radar of the tax inspectors for sort of what I call the wrong reasons. Then there's paperwork. Point 3, you've got to be a little bit boring and organized to do your own tax. You need to keep records. How many records will depend, but you need to be able to justify your income, any expenditure or expenses that you're going to claim. If you're going to claim additional pension relief at the higher or additional rate, for example, on pension contributions, or you're going to try and get tax relief on gifts to charity. You've got to keep information in case you're challenged. If you're making regular disposals of assets which are chargeable to capital gains tax over and above the allowances, which unfortunately are shrinking, as I make this video, you've got to keep records. You've got to know what's happened and when. You've got to also make sure you claim loss relief and so on. And don't forget, I've hammered it home a few times, some of the annual allowances that bring down your income tax and capital gains tax liabilities, inside and outside tax wrappers, are sort of use it or lose it. You can't necessarily go back if you forget and reclaim from previous years in a lot of cases. Number 4, don't let the tax tail wag the strategy dog. That's a bit of a cliche. What do I mean? What I mean is people sometimes get obsessed with tax and reducing tax, and they forget that the name of the game with saving and investing is to make sure you've set up a strategy that will meet your future goals first. Then, why wouldn't you want to make it as tax efficient as possible? But it's kind of that way round, if you like. So we're going to be careful. Tax evasion is an absolute no-no. Tax avoidance, some people question the moral legitimacy of it, but that is simply making the most of the current rules in your favor. That is allowed. Actually concealing stuff from the tax man, either deliberately or even negligently, is a no-no. And then, execute well. In other words, make sure you've set up both an investment strategy and a matching tax strategy. It might be quite straightforward, and make sure they run together in parallel, and that your tax strategy reflects any changes in your overall investment strategy and so on. And finally, be consistent. There are two certainties in life, goes the old dark joke, taxes and death. Okay, we're talking about one of them here, although inheritance tax arguably combines the two. So make sure that you do certain things to make your life easier. What I'm saying is tax never goes away. No government's going to abolish it. All right, it is quite complex. It could be simplified, but that's not for today. So automate as much as you can. Set up prompts to remind you when key deadlines might be coming up, so you're not panicking, as so many people do, right ahead of a deadline. I mean, that's human nature, but it's best to avoid it if possible. And above all, if you've gone through my 5 points and you're thinking, actually, this sounds pretty heavy duty, quite time consuming, and a little bit uninteresting, well, talk to somebody who might be in a position to take away some of the load, or at least advise you on some of the more complicated bits. So there you have it. More information in the usual places. Killick.com/lo has quite a few tax-effective savings videos in it. You've also got the guide I mentioned, not this one here. It's a how-to guide. It's got a slightly different blue cover, and it's all about tax-effective saving in the context of saving, planning, and investing. And then there's Confidant, which quite often has a tax article somewhere in it. And again, editor at Killick.com if you want the latest copy of that.